Imagine a system that forces you to pay tax not on what you earn, but on what you own, even if it doesn't generate income. Does it sound fair? For Pakistani pensioners, this isn't imagination. It's the reality of Section 7E of the Income Tax Ordinance. Welcome back to the Tax Dosti YouTube channel. Today we're diving deep into a controversial tax law, Section 7E of the Income Tax Ordinance 2001. Many are calling it a highly confiscatory tax, especially for Pakistani pensioners who are struggling with rising costs. We'll explore what makes it problematic and why it is essential to understand its implications. Section 7E, introduced in 2022, imposes a tax on what's called deemed income from immovable properties. Essentially, it treats a percentage of your property's fair market value, 5%, as if it were income, whether you actually earned it or not. This can cause serious problems for anyone, and especially for pensioners on fixed income. The tax levied on this notional or imaginary income is 1%, regardless of the income generation capacity of the property. Now, why is this particularly troubling for Pakistani pensioners? Firstly, they often live on a fixed income. This tax on deemed income requires them to pay taxes out of savings or retirement funds, even when they haven't earned a single penny from the property. More importantly, Section 7E has no connection to any actual financial transaction or income. It is purely based on the fair market value of the property, which is a notional amount. Many pensioners have inherited property for which they have no intention of selling. There is no actual income being generated, but they are now obligated to pay tax on it. This often forces them to either sell off their lifelong possessions or struggle with the imposition of this tax. This is taxation without basis in reality, and this makes Section 7E a potentially confiscatory tax, which has been challenged in several superior courts of Pakistan. If you're understanding why this is a serious issue, then do hit the like button. This helps others understand this issue as well. The arguments against Section 7E are mainly based on it being a confiscatory and discriminatory levy on people, especially on pensioners. The legislature is imposing this tax on the premise that they are making an income, and this imposition results in double taxation as property tax is also being paid. Section 7E imposes a tax on notional or imaginary gains and requires no economic activity, whereas every tax has to have a clear link with a transaction that generates a real or tangible income. Section 7E is also being termed discriminatory as it has left out certain segments of the population and only taxes others. This violation of constitutional rights has also been cited as another reason for it being an unconstitutional tax. The courts have reiterated that the tax cannot be excessive, unreasonable, or confiscatory. It should not cause a hardship to the taxpayer. Also, it has to be kept in mind that fundamental rights have to be protected. The plight of Pakistani pensioners and the implications of Section 7E raise serious questions. Section 7E may be considered as ultra-virus to the Constitution. Are our laws protecting the vulnerable? Is this fair taxation? We encourage you to inform yourself and demand fairness from the authorities. What do you think? What should be the next steps? Share your thoughts in the comments section below. Don't forget to like, share, and subscribe for more updates on this and other important issues. We will continue to update you as new developments occur. Subscribe for more information.